Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Bond yields climb after Jay Powell says the Fed will be patient before lowering borrowing costs. Traders look ahead to today's US inflation print. Alibaba shares surge in Hong Kong on reports the e-commerce giant is working with Apple to boost its artificial intelligence features. Plus, ABN AMRO warns US tariffs could impact the Dutch economy, while Heineken beats full-year estimates on strong sales of premium beer. We will speak to the company's CEO.
Perhaps those strong earnings, Anna, reflected in the markets this morning. You are seeing futures for the Euro Stoxx 50 higher by 0.2%. The FTSE 100 not fully on board, though flat when it comes to the futures picture. I think it's more interesting, perhaps, in the dollar-yen story, where we are seeing weakness in the yen off of a pretty interesting JGB bond sale, where yields actually went higher. The currency not catching that same momentum. Gold as well, slightly on the back foot. We'll see if that changes around the tariff conversation. The countdown to the opening trade starts right now.
We do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Federal Reserve Chair Jay Powell in front of the Senate Banking Committee yesterday. He goes to the House today. We also get CPI data today as well. It's a big day for Jay Powell. It's a big day for the markets. The Treasury market yesterday reacting to what Powell had to say. Basically, Powell's playing it cool. He's got too much on his agenda right now. I wonder whether or not he feels that he can make any big decisions. The rest of us don't know what Trump's agenda is looking like at the moment and how it's going to crystallize and affect the economy. Why should he? And I think that probably is the problem that he still faces at the moment. How does he go forward from here? How does he have any degree of certainty? None of the rest of us have.
Yeah, I mean, day two is today of his testimony. I doubt he'll have any more certainty than he did yesterday. I doubt he'll want to wade into the politics any more than he did yesterday. He managed to give a sort of wide berth to a number of the questions that were around the Trump agenda, the White House agenda, and what they would do to inflation. His basic message was it's too soon to say. He did acknowledge that there could be some inflationary risk from some of the policies, but generally too soon. And we're going to get. And his overall message, yes, was that they're not in a hurry to change interest rates. They're in a pause. And I guess we'll get that CPI reasoning later on today if we get this sort of stubborn, sticky inflation picture that we expect to see, 0.3%.
I wonder when we start to hear the words hike getting back into some of
Haven't we already?
I mean, we have, I think, from the market perspective, but it hasn't been an idea that's necessarily been floated from any of these policy members. And we're talking about the CPI numbers. This is on a year-over-year basis. 2.9% is expected, but that's an increase. The last few months have been an increase in inflation.
If a Federal Reserve official says the word hike, it's game over.
Yeah,
that is it.
The market hasn't heard that quite yet, has it? Because we're still pricing one cut.
We're still speculating about cuts.
Yeah.
You put hike on the agenda. If any of the Federal Reserve, anybody on the FOMC says the word hike,
Isn't that the dislocation of this market, though? Isn't that, I mean, we're even pre-Donald Trump, we're already looking at an upward trajectory on these year-over-year CPI data, and we still haven't gotten inclination that even no cuts is on the agenda.
Well, I just think when you're in a situation where such big policy changes are in the offing, but yet a central bank can't work with maybes and perhaps and has to wait for facts, you're going to get a dislocation between what the Fed is observing and talking about publicly and what the market is starting to price in, aren't you?
Absolutely. Sorry.
I was going to say, is this the 2025 version of Powell's insurance cut, basically, of 2018 from the first Trump administration, that you have this slightly dovish almost take on the markets relative to the data because of this, as Anna was talking about, the policy uncertainty? Is this the 2025 version?
That didn't sound dovish to me.
It didn't sound dovish, but in an environment where everyone else is talking about inflationary uptick, you're not talking about hikes? That feels relatively.
He's basically just saying, I don't know at this point. I don't think everybody's on the same page as expecting hikes. You listen to Torsten Slok, you read his stuff. Clearly, he feels that the economy is reaccelerating at this point in time. The hikes are definitely a possibility. There are plenty in the market that still believe that either we're a very long pause or a cut is still possible at this stage. Actually, the risk is relatively symmetrical, potentially, between the two. CPI is going to be interesting. We just spent a moment on that today, in as much as companies tend to push price rises through at the beginning of the year. So you get this seasonality effect plus this kind of push through of prices, and it's hard to get that exactly right. And that represents maybe some upside risk to the story today on CPI. Let's move on and talk about China. There's two stocks that stand out in China today. Vanke, I'm not probably pronouncing that correctly. The stock is up in Hong Kong 15%. Vanke, voice in my head tells me I'm getting it vaguely right. We're up by 15% on that stock. It looks like the Chinese authorities are drawing a line under the property crisis in China. This is one of the biggest property developers that still is not in a major crisis, and it looks like they're going to try and draw the line under that. The stock is responding quite positively to that. The other one is Baba. Look at what has happened with Alibaba, this idea that maybe it's going to partner with Apple on AI. Yeah. So you've got this Chinese tech story, which is really taking off, and you've got a number of houses, Morgan Stanley, UBS, really kind of taking a positive view on this. And then you've got the property story as well. Coming in this morning, I thought the property was a negative and the tech was a positive. Maybe the property becomes a positive for the market
Certainly
as well.
In terms of the share price reaction in that property developer, we're seeing that moving higher, as you would expect, with help with funding from the government. Really fascinating, the China tech story, though, and I wonder if, because we've been so focused on the European outperformance of the Mag 7, we've forgotten to look over to Asia a little bit year to date, because the performance there is incredible. I mean, Alibaba year to date, it's such a big company, and yet the stock year to date is up by 36%. That is an incredible performance, isn't it? When you think about tech. BYD also has been doing well on the self-driving story. So there are plenty of strands to this. And we have a great story on the investor David Tepper, who's increasingly positive on China and all things China. And he's been upping his stake in Alibaba and JD.com. So there are plenty of voices out there that are buying the China tech theme.
So the difference as well is that US tech trades sort of on massive multiples up here, 30s, and Chinese tech trades all the way down here. So the valuation story is completely different. You need to take a look at a longer-term chart to appreciate the fact that, yes, it's rallied a lot, but from a very low level.
But this integration idea, and you kind of pointed to it earlier, this integration idea of an e-commerce company now partnering with AI. Amazon, which I think is kind of the Alibaba equivalent, hasn't really done that in the States. They've tried to create their own internal, but in terms of partnership with the likes of an AI offering, that's new when it comes to Alibaba with Apple. Or you mentioned BYD with DeepSeek. The fact that it's like killing Tesla stock in the state, that I think is a partnership that almost China is underpriced on when it comes to the market saying, where is the tech trade?
Julie Wren has a great piece out this morning talking about that China Sputnik moment. If that's what we've seen with DeepSeek, how much is this going to change international investors' perspective? How much risk are they prepared to take in China if that's what we're seeing?
I guess it's a perception thing. Up until now, it's been negative, and actually behind the scenes things have been happening. The property story, they can draw a line under that as well, because that's the big kind of break, you could argue, on the Chinese story. I'm not saying it's a kind of positive, but a stopping of the negative would be...
4 years in, though. It feels like we've tried to draw that line in the sand a lot of times.
I agree. Let's talk about the earnings story this morning. Where do you want to start?
I mean, I think if the connective tissue between China and Europe is that unexpected sources of optimism, I think that's kind of the message out of these European earnings this morning. You got it from ABN AMRO, you got it from Heineken. For me, it's the Banco BPM story that really stands out to me. They're raising their offer for Anima to about €7 a share. We know UniCredit yesterday also talked about increasing their stake in Generali. So this banking consolidation theme continues to ripple through as we still piece together the Heineken piece, the ABN AMRO piece. I believe Heineken already gaining about 6.7% on trade gate this morning.
It's up big. Looks like the numbers are much better, particularly out of the States. The beer volumes in the States look really good. People are still... The surprise here, I was trying to read through the Heineken statement. The surprise here is that the consumer is still spending on premium beers. Outside of the US, the consumer feels like it's struggling. And yet the numbers out of Heineken this morning suggest that, despite the fact that we are struggling, we still want to drink premium beer.
Right. Well, maybe there's a connection. Maybe there's a connection there. Adjusted operating profit guidance from Heineken, 4 to 8%. I was wondering if that's quite a wide range. I'm not entirely sure, but we will get into a conversation about that later in the programme.
Absolutely. What else have we got coming up on today's show? Bailey Wakefield of Aviva Investors is going to be joining us very, very shortly. Multi-asset portfolio manager. We'll talk about what's happening in the markets. Helen Jewell, similar conversation. BlackRock EMEA CIO for Fundamental Equity. Bruno Maciche, I hope I pronounced that correctly, former Portuguese European Affairs Minister and author of World Builders, is going to be joining us a little bit later. Axel Eggert, Director General of the European Steel Association. We are going to talk not only there about tariffs, but also about the energy story. Europe is beginning to enter a period when the energy story is becoming more and more critical. And this summer is looking really difficult, and it looks like we could see some policy reaction as a result of that. We'll figure that one out a little bit later.
Yeah, certainly something that's also on the docket. Let's talk about what else is on the agenda today. Of course, we did talk plenty about the CPI story. 1:30 p.m. UK time is when that data drops. 2.9% is what is expected on a year-over-year basis. And just about 90 minutes after that, 3 p.m. UK time, it is Chair Powell's turn again, this time in the House Financial Services Committee. So that testimony will continue. Will we get a little bit more on that? And then, of course, it is the ECB's turn. We've got Nagel speaking about 5 p.m. UK time, and then a slew of earnings on both sides of the Atlantic. EssilorLuxottica, Robinhood, Reddit, and Kraft Heinz, all four reporting.
So we're looking for some earnings stories. We hear from Powell again. We get the US CPI, so that's the macro side of things. But tariffs, I mean, it feels like this is the first day in a few days that we haven't come in with a big new announcements on tariffs. But we are waiting for them. Yes, we are waiting for them. We're waiting for the details on how Europe will respond. Of course, those tariffs on steel and aluminium not until March the 12th, so maybe they have a bit of time. But also thinking about reciprocal tariffs and where the tariff burden falls on America right now and where they will push back.
And how do we define what a reciprocal tariff is? How universal will it be applied? Will it be applied to Europe? Universally, will it be applied to Europe? Lots of questions still surrounding this. Trump was asked about this yesterday. He was asked whether or not we're going to see reciprocal tariffs today. The answer was, we'll see. This is how we make policy now. This is how the global economy runs. We'll see. We'll see what happens.
It's quite building up quite the anticipation. I thought Jonathan Levine made a really good point yesterday, which is that how do you even do the math around that for tariffs, even between, say, the U.S. and Canada, where goods go back and forth about 1 million times before they actually get to the final product.
Just like Brexit all over again. Every time people talk about the Canadian-US
Shiver
border,
just went down my spine.
Well, I just think about all the conversations we had about how many times Guinness crosses the Northern Ireland Republic border.
Yes.
Anyway, stories we've known and
that's an important story,
dealt with.
Guinness. Anyway, let's talk about what else we need to factor into our knowledge this morning. The US President Donald Trump has backed off his threat to withhold US aid for Jordan after King Abdullah agreed to accept 2,000 ill children from Gaza. During a White House meeting, Trump reiterated his desire for the US to take ownership of Gaza. However, King Abdullah sidestepped questions about the plan, saying he would discuss the future of the Strip at an upcoming meeting in Saudi Arabia once Egypt has presented its proposal.
One of the things that we can do right away is take 2,000 children that are either cancer children or in a very ill state to Jordan as quickly as possible, and then wait for, I think, the Egyptians to present their plan on how we can work with the president to work on the Gaza challenges.
I didn't know that, what you just said, 2,000 children with cancer or other problems, and that's really a beautiful gesture. That's really good, and we appreciate it.
Late last night, Egypt said it plans to present a, quote, comprehensive vision for the reconstruction of Gaza that allows Palestinians to stay on the land. Nissan shares have slumped after the chairman of Honhai, the world's largest maker of contract electronics, said his company is open to buying Renault's stake in the struggling Japanese car maker. Honhai, also known as Foxconn, the largest manufacturer of iPhones, has been venturing into newer areas such as EVs to offset stalling smartphone sales. And the UK government is facing a new risk of having to make spending cuts after the official fiscal watchdog downgraded its growth forecast. The report from the Office for Budget Responsibility leaves the Chancellor scrambling to meet her already tight rules on borrowing. She has ruled out tax cuts. So we don't get tax cuts, so therefore, in theory, we get spending. Yeah, we get spending cuts. That seems to be the theme, yes. And this is a private forecast that goes from the OBR to the Treasury. Our source is telling us that they have downgraded the growth estimate. We should say that they get 5 chances to do this before March, which is when she has to actually sort of act on this, March 26th. So this is kind of an early warning sign. And then on the other side, how bad is the growth story in the UK? We're going to get that growth data tomorrow, and a survey of economists does suggest that we'll get a negative print on GDP for the fourth quarter, which came after a flat print, 0 growth on the third quarter. That sounds a bit recessionary. You know, it's fascinating because we talk about so much doom and gloom in the UK and kind of this stagflation, and yet if you look at the £13 billion bond sale yesterday after the bell, record, amazing, record, solid demand. People still want this stuff. At that yield, yes. Yeah. At that yield. And actually a lot of European countries have been setting records, haven't they, for the amount of demand they've seen for their issuance. So there has also been I need to get this right, there's been a rolling off, a bond has matured that a lot of people bought because it had a huge tax advantage, and that money has come back into the system, and I do wonder whether that was a contributing factor in what we've seen. I could be completely wrong about that, but certainly I've been reading a great deal about the fact that people have been looking to deploy this money.
We have a guest to talk rates later in the programme. There we are. We'll answer that question. Coming up on this programme, then Heineken posts a beat on full-year organic beer volume. CEO Dolf van den Brink joins us later this hour to discuss. Plus, we'll head back to Paris to wrap an eventful AI Action Summit that saw the world's superpowers spell out their tech ambitions. We'll have this tech ambition story covered from a number of angles this morning. Up next, Jay Powell tells Congress he isn't in a hurry to cut and markets are reacting. We'll discuss. If you want to get involved in any of our conversations, please do. IB plus BBTV Go, that is the function to use on the Bloomberg terminal. This is Bloomberg.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. Longer-term inflation expectations appear to remain well anchored. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
On balance, maybe Fed Chair Jerome Powell sounding a little bit more hawkish, not in a hurry to cut rates. He's not talking about raising them, but he's not in a hurry to cut them. What do we make of all of that? How did the market take it? Valerie's here to tell us.
Guy, Treasury yields were modestly higher. The dollar was a bit weaker after Powell took the stand and answered those questions to the Senate. But there really wasn't a lot of new news there. He echoed a lot of the same lines from the January press conference. Even when he was asked about tariffs, he echoed the same kind of lines, saying it would be irresponsible to speculate. It remains to be seen what kind of tariff policies would be implemented. He's not jumping to conclusions yet on what it would mean for growth and inflation in the U.S. We do have another catalyst before he begins day 2 of his testimony, and that is U.S. CPI due at 1:30 p.m. UK time. Keep your eye on the core CPI month-on-month print. It's expected to tick up from December reading to a 0.3%. But there is a little expectation for any surprises in this data today. Economists' expectations are very narrow on today's print. But perhaps we could get a market catalyst again coming out of the Trump administration. He is due to sign more executive orders at 2:30 p.m. Eastern time today, so later today in London. Watch out for some currency volatility if these executive orders are about reciprocal tariffs. The thought is there he could be taking an eye at the European Union, and perhaps we could see some euro weakness off the back of that.
Valerie, thank you very much indeed. Let's carry on the conversation and talk about how the markets are positioned. Bailey Wakefield, multi-asset fund manager at Aviva Investors, joining us around the table. In a world that's dominated on a daily basis by Donald Trump, and we haven't got any obvious headlines first thing this morning, but who knows, the day is still young. How are you thinking about, how are you factoring in the uncertainty that he creates into your portfolios?
I think what's key at the moment is having a diversified portfolio. And by that, I mean having a number of positions across different asset classes, but at the same time, you don't want to have so many tactical positions that you're essentially washing out your key views at the same time.
What are the key views?
So there's a few there. US, we still think that's an area to be positive about. Corporate profitability is still strong. We know that Trump is going to be thinking more about deregulation, be thinking about tax cuts. That's going to be positive for the US. We also like having gold as a position in the alternative space. I think what we've seen is that investors are quite keen to have a store of value as well as assets that are producing an income or providing gains.
So are you, Bailey, good morning. Are you looking for ways to diversify away from, you like the US story in stocks, but are you looking for ways to diversify away from it? Or does the US stock market look like it's increasingly doing that itself? I mean, we've been looking at European outperformance. We've been looking at Chinese tech, OK, bouncing off a low base, but still recovering pretty well this year to date. Are you looking at any of those regions?
Yeah, I think that's fair to say. With the US, we've definitely seen diversification amongst the S&P 500. We haven't seen tech leading the way as it has done for the past couple of years. Tech has still been relatively strong. It's not being a drawback on the index. But at the same time, we're seeing areas like financials starting to have their key role in the index.
When does the Federal Reserve turn even more hawkish than right now? We keep talking about these inflationary risks off the tariff story, and yet I still feel like we're not getting that messaging from Chair Powell that those inflationary risks are an actual concern to the point that maybe a hike needs to be put back on the table. The markets are talking about it. When will the Federal Reserve, what is that red flag for you?
Yeah, I mean, I think we're going to learn a little bit more today after the CPI print, that's for sure. For what Powell was saying yesterday, it sounds like they are much more aware of the potential upside to inflation that we can see. So that's going to be something that we're going to be monitoring really, really closely. He also pointed towards the labour market being strong, so anything there to show any differences.
I don't often get to have this kind of a conversation, but the S&P's up by 3% this year. DAX is up by 10%. Is Europe going to continue outperforming? Should I be buying Europe? Is that the diversification trade? China tech's doing really well as well. That's another potential. Where are you looking outside of the United States? I appreciate that the US is still a core holding, but is it possible that actually elsewhere we're going to see the outperformance continuing? These are good numbers. We're in February and Europe is up by 8, 9, 10% already.
Yeah, absolutely. I mean, Europe has come off quite a low base.
Yep.
We know following Trump coming into presidency and all that being announced that Europe didn't have the best end to the year. So positioning has been quite low, and that's been a helping factor. I mean, we've already spoken today about some of the earnings stories that are coming out of Europe that have been quite positive. They were starting from a bit more of a low base. We've seen that the European consumer is starting to spend a bit more because saving rates are starting to come down. But I think we're going to have to see a little bit more to be convinced that it's going to be lasting over the longer term.
Yeah, I was going to ask the trade-off between stocks and bonds in this geography, well, in the European geography. Are you buying stocks because you anticipate the recovery that you were perhaps alluding to there? Or do you buy bonds because you're worried about the growth story? I mean, maybe different parts of the geography look different.
Yeah, exactly. So for us, we are thinking about bonds a little bit more in terms of that growth story, potentially seeing some weakening there that it's worth kind of looking into the Eurozone.
So UK gilts, for example?
UK gilts is a position that we have as an overweight in portfolios. It's a position that we've held for some time. We've seen some volatility, but it's something that we can continue to hold.
How long does that bid for bonds last? Anna made the point earlier that the bid for the UK for gilts and the bid for, say, European bonds across the board have seen some pretty solid demand, pretty record demand. Is that a blip?
No, I don't think so. At yields we're currently at, that I think it's more attractive for investors going forward, for sure.
I think the question the market's trying to ask at the moment is we started off with the Trump administration, the first few days, coming into the Trump administration with this kind of Trump trade. Yeah. Very positive. Kind of US economy is going to do really well. LBOs are going to kick back in. M&A is going to be a huge theme. The dollar's going to do really...
Deregulation.
All of this stuff, the good stuff. The last few days, that definitely feels like it's come under pressure. And that is being questioned. And the market's beginning to get a little jittery and a little bit nervous. Like, we didn't start the year off with this big M&A push. Why not? Where did that go?
But that's my question, right? Of like, is this a blip? Is this a short-term rotation as opposed to something that does have longevity?
Yes, and I wonder how much the uncertainty around tariffs and a whole host of other policy initiatives, maybe that weighs on corporates and their willingness to commit in all kinds of ways, whether that's investment. I don't know whether that's what corporate conversations look like to you, that CEOs are just going to stall when they don't have clarity. In terms of big investments or M&A, I guess.
Yeah, I think at the moment we have enough positive catalysts that mean that businesses will be able to do well, but that could be an additional kicker down the road if we do see that pickup in activity.
All right. Bailey Wakefield, multi-asset fund manager at Aviva Investors, joining us around the table this morning. It feels like everyone's just kind of waiting and holding for what's going to come out of the Trump administration. But in the meantime, some pretty strong earnings. Coming up, we're going to dive into one of them. We're going to hear from Heineken CEO Dolph Brink, who's brewed a winning strategy in premium beer, I believe, pun intended there, but some pretty strong numbers. We'll talk about the China angle, the tariff angle, and of course the supply chains, all of that. That interview coming up next. In the meantime, take a look at futures. Martial positivity on your stock 50 futures in the DAX as well. FTSE 100, not so much. This is Bloomberg.
Welcome back. 30 minutes until the start of trading in equities here in Europe. Let's look at the futures picture, and it looks a little bit mixed. We seem to be on pause in terms of our thinking, appropriate, given we heard a lot from the Fed Chair Jerome Powell about how the Fed is in no hurry to cut rates. Markets appear to be on pause a little. We are, of course, dealing with a host of earnings reports. We have a few this morning. So Euro Stoxx 50 futures, we do see some upside, perhaps some of that coming from the drink sector. We'll look to that. In terms of the bond market story, again, looking pretty mixed. We saw yields over in the US moving a little higher on Powell's testimony yesterday, so perhaps looking at that as a bit of a transatlantic driver. And there has been a lot of that transatlantic driving of European rates in recent weeks, but we are looking at a pretty unchanged picture this morning in terms of the bond market story here in Europe. Kriti, what has caught your eye?
Well, Anne, I feel like the overhang over everything happening in both the States and specifically in the read-through into Europe is this tariff story, is this energy story, specifically when it comes to the likes of natural gas. Right now, we're seeing some interesting pricing in that commodity market. This is a one-year chart of Dutch European gas futures hitting a two-year high. You put that into an oil equivalent, it is a $100 barrel oil equivalent, which is really scary and really destructive for some of those manufacturing-intensive sectors that have a lot of the emphasis on energy. Let's put this into some perspective here and zoom out to a 5-year chart, because now we are starting to hear reports that the European Commission is talking about installing an energy price cap. The last time they did this, we weren't at these levels. We were over here. We were in the depths of an energy crisis in 2022. Now, that price cap was never fully utilized by the European Commission, but the tick higher is starting to make people very worried, not just in Brussels, but in the likes of Paris and Oslo as well. And that's where I want to go next, because this increase in energy prices, a lot of it driven, by the way, by that Germany and the imports there and the energy story there and storage costs that haven't been able to come to snuff, means extra pressure on the Norwegian grid, extra pressure on France. And when we look at that net energy exports, those are the two countries that are really coming to the German rescue the most. And I think this is really crucial, because now it's showing up in the political dynamic in Norway, in France, and certainly reflecting in energy prices as well, Guy.
Absolutely. And it's fascinating to see how this is affecting European industry as well. We're going to talk a little bit later about what's happening with the steel story. The European steel story is a crisis of tariffs, but also a crisis of energy. Energy prices are much, much higher here in Europe, and as a result of which it's hard to produce steel in the way that you can produce elsewhere. You can produce it elsewhere in the world. Aluminium, obviously the same thing too. European industry is being hit hard by this story.
Yeah.
And there's also just fracturing within the system. Norway is so critical, but the Norwegians are like, why are we paying super high energy prices when we produce all this stuff and export it to the rest of Europe? So the energy crisis this summer looks like it's really beginning to build.
And as we see AI and data centres become increasingly a theme, and as European governments scramble to attract that kind of business, this is the kind of competitiveness that's going to be important, not just for heavy industry, but also for the tech
Why
industry.
would you build a data centre in Europe when energy prices are significantly higher? That's a story that I think Emmanuel Macron didn't talk about when he talked about his huge AI investment and what he wants to do in France and what he wants to do in the rest of Europe.
In the surroundings of the Grand Palais. We will be back to Paris later on to talk about tech and how it's coping with all of that news flow. Let's think about the European earnings story. We've had numbers out from the drinks maker Heineken this morning. Beer volumes rising by 1.6% in 2024. That was ahead of the estimate, which was 1.4%. It seems that premium beer, such as Birra Moretti and non-alcoholic alternatives, are driving the growth. Let us talk to Heineken CEO Dolf van den Brink, who joins us now and can talk us through some of the latest news here. Dolf, very nice to have you with us. So you've clearly done okay from premium beer. Tell us where you're seeing the strength in premium beer and why you think you're seeing strength in premium beer right now.
Very good. Thanks. Good morning. Thanks for having me. Across the board, we are very happy with our results. Indeed, volume growth 1.5%, 5% revenue, 8.3% operating profit. That's what we set out to do. We're very happy that we're able to deliver that. Premium indeed continues to be an incredible strength of the company. It's an old trend, but that's still very relevant. Over the last years, premium has outgrown the category time and again. We are the leader globally in premium beer, of course, with the Heineken brand, which was even growing 9%. We keep investing disproportionately in our key premium propositions, Heineken, Moretti, Desperados, Kingfisher Ultra in India, what have you. But indeed, also 0.0, very important, up another 10%. We like to say that we're the pioneer. Back in 2017, when we globally launched the Heineken 0.0 brand, the category was basically dormant, And now it's growing consistently double-digit year over year.
Yes.
And we really, for sure, intend to keep it up.
OK, Dolf, I want to ask you about that growth. I mean, how big can that category get as you witness changes in society, perhaps, and Gen Z may be consuming alcohol in a way that's different to older generations? How big does that category grow?
We believe that over time, this really will become a meaningful part of the market. And you already can see, I think globally, it's still barely 1% of global beer. In key Europe, it's already on average around 5%. And in key markets like Spain and the Netherlands, it's already 10%. I saw recent numbers that, for example, in the food channel in the US, it's already 4% of revenue. So it is really scaling. And if we keep this double-digit growth up year over year, we do believe it will become a very significant segment of the total beer market going forward. And again, we are the global market leader. We calculated that since we launched Heineken 0.0, we have captured around 40%, 40, of the total growth of the 0.0 segment globally. And we will keep investing, like what we're doing with the Formula One sponsorship, which is fully dedicated against Heineken 0.0.
Dolf, it's Kriti in London. I want to ask a little bit about your consumer spending story here. In the States, we are seeing a little bit of a slowdown, most recently in earnings like in the likes of McDonald's, for example, which I can appreciate. It's a very different product offering than yours. But the way that you are seeing some of these American companies deal with it is an increase in prices to offset the increase or the decrease or even the stagnation in volumes. Is that something that you're looking to impose when it comes to maybe offsetting that slowdown in the States?
No. So for us, the States is a relative moderate-sized market. For us, what's really important is our diversified geographical footprint. We're operating in 70 operating companies across 4 regions. We saw growth in all of them in the aggregate, so very pleased to see. On the pricing, for example, in Europe, after a lot of input cost-driven pricing in the last years, we made indeed a deliberate choice to be moderate in our pricing last year to really allow the consumer to catch up. And we did see that with beer returning to growth in our core European markets. So that's at least how we want to go about it. Overall total portfolio, we always aim for balanced growth, meaning both volume growth and having good price mix growth, as we were able to deliver last year.
Well, Dolf, you talk about that diversification story. I'm looking at the volumes number here. Sales coming from Brazil, Mexico, India. Let's talk about another major EM market, and that, of course, is China, where the consumer has been at the core of the concern. What are you seeing there? Are you seeing promise in that part of the world? Is some of the fiscal stimulus coming through from the Chinese government actually showing up in consumption? What does that look like for you?
Yeah, we really focus on the part of the market where the growth is, which is in premium. And we're fully focused on the Heineken brand. The Heineken brand was up double digits again last year in the key Chinese market. We now also see good growth on the Amstel brand. So we really focus on premium in the Chinese market. That's not everywhere the case. In a lot of our larger operating companies, we play both in mainstream as well as premium. And by the way, and this is the first time in a couple of years' time that globally we did see mainstream positive at around 1.7% and premium around 5%. So we feel we're in a good place from that point of view.
Dolf, good morning, it's Guy. Let's talk about inflation. How much inflation do you think the consumer will take? How much of a price maker can you still be in this current environment?
Yeah, Again, I think we need to be balanced. The consumers had to take a lot of pricing over the last years. For example, the energy shock in Europe, in our core European markets, has really led to very fast price growth in the recent past. That's why, again, we deliberately kept our pricing moderate to allow the consumer to catch up. You do look at it market by market. For example, in key African markets where you have hyperinflation, you really need to make sure that you price for the inflation, because otherwise the profitability erodes extremely quickly. So it is market by market, but we are happy with how we were able to navigate that last year, allowing consumers to catch up.
How much input inflation are you anticipating going forward? You've got aluminium and steel tariffs now becoming a reality. That's going to affect, presumably, what happens with the cans. Energy is also something of a crisis here in Europe as well. We're talking about European industry maybe needing to be helped by the European Commission with price caps. How much energy costs inflation are you talking about? How much materials cost inflation are you thinking about as you plan for the rest of this year?
Yeah. We guide on that in our outlook statement. So we're guiding mid-single-digit input cost inflation for this year. But actually, that's driven by some of these high inflation countries in Africa. If you isolate for them, we expect low single-digit input cost inflation, so which is pretty moderate. And that has to do that we're already almost fully hedged for the year, for 2025.
Can I ask you, Adolf, about something that's happening in another sector that many analysts are thinking about how it will affect your sector? I'm thinking here about GLP-1s, that class of drug that helps people to lose weight. And there have been a number of consumer-facing businesses that have made statements about how they expect this to maybe weigh on demand or at least impact, or they're studying it. Are you doing work on what you think the impact of wider use of this kind of medication will be on businesses such as yours?
Yeah, no, it's certainly something that we should follow closely. Right now, it's predominantly a US, North American phenomenon. The correlation between the medicine and food consumption has been more established than it has been on alcohol. So it's premature to draw any major conclusions on it. And in the aggregate, I would worry right now more about keeping our pricing moderate. Worries about consumer sentiment is higher on our list than GLP-1. And again, the strength of our global footprint, having all those big operations across Southeast Asia, India, Africa, Latin America, really makes that, we have a diversified portfolio, also mitigating of any impact that might come forward in the future.
Dolph, a final question on the buybacks piece of the equation. In your earnings announcement, you're talking about a €1.5 billion share buyback program over the next 2 years. And this was widely expected by the analyst community. But talk to us about the sustainability of that at a time when we are dealing with that geopolitical volatility as well. How long can you keep that buyback plan up?
Yeah. No, what's very important, we for many years had a very clear hierarchy of capital allocation priorities. First and foremost, investing in organic growth. And again, we're doing that. We increase our marketing, selling expenses at double the rate of the revenue growth with 300 million increase. Digital technology. Right now, we're building 3 new greenfield breweries in high growth markets in Mexico, Brazil, Dubai. So that's always our first priority. Inorganic opportunities we'll always pursue if they make sense, like what we did in India with the acquisition of UBL or Distel more recently in South Africa. But we are deleveraging very quickly. We generated more than 3 billion in cash flow last year. Our leverage dropped to 2.2, which is now below our optimal capital structure, which gave us the confidence to decide and commit to this share buyback of 1.5 billion over the next 2 years.
Dolph, great to catch up. Really appreciate your time this morning. A real pleasure. Heineken's CEO, Dolph van den Brink. Coming up, we're going to continue with the Dutch theme. ABN AMRO's out with numbers as well. Can't speak this morning. We spoke to its CFO a little bit earlier on. This after the bank missed fourth quarter profit estimates due to rising costs. More on that story, plus all the other stocks you need to be watching into the open. This is Bloomberg.
Welcome back. 7:47 in London. The opening trade is 13 minutes away, and the picture looks like this. Flat for the FTSE, a little bit of green elsewhere. Working in some corporate earnings this morning. Also picking up from an Asia session that's up 0.4%, but particularly strong over in Hong Kong. Let's talk about what's going on in the wider China markets. Let's get to our Markets Live executive editor, Mark Cudmore, to talk about the markets in 3 minutes. And Mark, let's start with what's happening in Hong Kong. Excitement around Chinese property names latterly. Excitement since the start of the year, it seems, around Chinese tech names. What do you make of the positivity today? The Hang Seng up by 2.6%.
Yeah, there are a lot of drivers to the moves we've seen in recent weeks. It's been quite an extraordinary run over the last few weeks, but it makes sense. From a macro point of view, the drivers of US exceptionalism are being eroded, and so therefore people are going to look to where else in the world is a discounted stock market. Now, Hong Kong is both a large and liquid and very discounted stock market that is going to benefit from the productivity gains that we're going to get from AI in a world where people are going to going, there is an alternative to US mega cap tech. Very much there's an alternative. There's an alternative they're being forced to consider. And then on the micro side, yes, we have support for the property sector, and we also have a little bit of enthusiasm specifically around the China tech sector. And we generally have a slightly improving China story at the margin. Again, this is not a very positive story. It's not a super bullish story. It's more that just there was excess negativity priced. But in fact, the policy actions we've seen under the US administration so far have been at the margin relatively beneficial for China compared to much of the rest of the world. Yep. If you take your base case of expectations of where we were a month ago.
Mark, has the Trump trade gone from being a positive one, a risk-on one, to being a risk-off one?
No, I don't think that's necessarily the case. I think it's less good for the US than people want. I think it's more negative for US stocks than probably is the consensus. I think for the rest of the world, it's a little bit undecided at the moment. I think, maybe it is a bit more of a negative one, but I don't think people were particularly enthusiastic around the world. So again, I'm answering that question slightly in terms of expectations. Going into the Trump taking power, his inauguration, the expectation was it would be positive for US stocks and negative for the rest of the world. I think people are realizing it's not great for US stocks. It's a lot more complicated than that. And that for the rest of the world, it's hard to know still, but they were already priced very negatively. And that's why you're seeing beaten down markets like China, like Hong Kong, like Europe doing really well as people are saying, well, maybe it's not quite so bad.
Mark, sticking on that theme, maybe you can help us with a little bit of detective work. This morning, Valerie Teitel and I were trying to figure out why the Japanese yen is so much weaker, given that JGB yields have actually risen quite a bit, and we are seeing this geopolitical risk. Why is the yen weaker today?
I cannot really explain quite the short-term move, but look, you know that I'm structurally not convinced by the yen here, but also a large part of this is, of course, we are seeing general kind of dollar strength out there. I think that some of the tariff measures announced so far, obviously Japan is going to be a little bit vulnerable to that steel story, and I think that one of the narratives out there is that previously it was assumed that allies would be safer. Now it's quite clear that probably the biggest victims of US tariffs will be the EU and Canada, and maybe not, and that now probably applies to other allies like Japan, and not the presumed enemies in terms of policy like China.
Well, we'll see if that holds through. Markets Live executive editor Mark Cudmore joining us this morning. We thank you so much for joining the program. You can get more up-to-date analysis from him and the rest of the team. MLIV Go is the function on your Bloomberg terminals. Go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So Heineken's numbers looking pretty strong today, beating on the estimates for the organic volumes, partly due to some of the premium brands, as the CEO was discussing on the show earlier. Now, these stocks, in terms of the beer makers, have had a bit of a slump over the past year. The most recent declines coming because of concerns around tariffs, so we could potentially see a bit of positivity in this sector today. Heineken, in terms of the analysts, really positive on the makeup there. Only one sell rating on that stock and 17 buys, so really favoured on the street for that one. Then, staying in Amsterdam, we've got ABN AMRO numbers out as well. Now slightly missing on some of their profits, according to the statement. The net income does look a little bit light, and a big jump up in some of their expenses. Some of that is due to staffing costs, and we are waiting for the new CEO to take over in just a few months' time for that company. We can actually see the stock slightly underperforming the rest of the European banking index over the past year. There were some concerns last year around the capital ratios at the company. We'll wait to see if that gets some attention later as well. And finally, in the Dutch earnings day, a hold. Now, this one does look a little bit light as well in terms of their sales numbers. But the big thing here is they have a lot of US exposure, so getting a boost from the strong dollar at the moment, and therefore paying out slightly more than expected on some of their shareholder returns. So that could potentially be a bit of a mixed one over in the grocery space for a hold. Then in the ratings changes, Morgan Stanley has a big note out on pharma today. They've got an equal weight on the big one, Novo Nordisk. They say they're waiting for latest data on the obesity drugs before they become more bullish. But they've got buy or overweight ratings on both AstraZeneca and Grifols. I'd expect those to be a little bit stronger in European trading this morning.
Thank you very much. Joe Easton, our equities reporter there. We'll keep an eye on the car sector as well. We have lots of there's conversations ongoing about who is going to buy the Renault stake in Nissan, and we had some reporting suggesting that Honhai could be interested in some sort of relationship there, even if they'd rather not buy it. But we'll certainly follow that one with interest.
Yep, Deliveroo could be a stock that's on the move as well. Keep an eye on that one out of London. You could see some of the steel stocks moving too. That continues to be a theme that we are watching very carefully. Renault looks like it's going to be opening up around 2-3% this morning. On the back of that story. So it looks like we are going to see some positive read across into the European car sector, which just felt in short supply recently.
Yeah, we should also mention that we were seeing such strong performance out of the DAX recently as well. We'll see how much of that holds up. We're already seeing futures indicated higher this morning, and we'll see, of course, where that's actually coming from in terms of the green on the screen. We should also mention we're in the countdown to the Munich Security Conference. So I wonder if we start to see a little bit more pickup or volatility in the defense
stocks. A lot of meetings taking place in Europe, where Zelensky meeting people, JD Vance is here meeting people, all ahead of that Munich conference.
Are we going to see also anything that uses a lot of energy starting to maybe get a more positive spin put on it as a result of potential caps coming through this summer? That'll be interesting. Europe's industries are feeling like they are struggling at the moment because of that disproportionate energy cost they have to pay. We'll come back to that a little bit later. The opening trade is next. We are 5 minutes away from it. This is what futures look like. That's next. This is Bloomberg. Wednesday morning, good morning. It feels like the day is still young. We've got still the potential of tariffs to fold into the session a little bit later on. We'll see, according to President Donald Trump, whether those reciprocal tariffs are announced. We've also got US CPI to think about as well. In terms of the session that we looked at yesterday, this is where Europe went out kind of down here. The US markets rallied. The S&P rallied after we closed from where it was. So that may provide a little bit of a positive push coming into this Wednesday session for European stocks. Kriti, we've also got earnings to think about as well. There's a lot to fold in today.
A lot to fold in today's outperformance in the DAX. I think we're all kind of scratching our heads about. We're going to dive into those details in a moment. But this morning, it feels like that optimism around Germany, which is not a phrase I use very often, showing up in the Eurostock 50 futures higher by 0.3%. The FTSE 100, though, Anna, not getting that message. It is flat at the moment. Guy mentioned, though, it's that earnings story that matters. We're getting a slew out of the Netherlands this morning. Those futures higher by 0.3%.
Yes, let's talk about some of those corporate earnings stories, Kriti, because that seems to be where we're getting news flow this morning, and that's not coming from London. It's coming from, well, the Dutch market in particular. Let's go first to Heineken. We're getting news. We've had news out of Heineken, of course. We spoke to the CEO talking about premium growth. Brazil, Mexico, India, strong markets for this business. Also talking about the zero alcohol potential for that business to grow. So that's something we're watching. ABN AMRO, profits missing estimates over at that particular Dutch bank. Expenses on the rise seems to be the issue, although the bank does expect expenses to stabilise this year. We're also watching Ahold Delhaize. So this is Dutch-based retailer, grocery business, but has a big presence over in the United States. Their fourth quarter adjusted operating profit just profit beating estimates, Guy.
Anna, I'm suddenly feeling like I've missed a trick, because this next board I don't think has the AEX on it, despite the fact that you just delivered 3 stocks out of the Netherlands that we need to be watching. It does. I'm told it does. Somebody else has thought about this before me. The AEX, we'll wait and see exactly what it's going to deliver in terms of its opening, but the FTSE 100 is already opening a little bit more positively, up by less than 0.1%. I think we're going to call that flat on a Wednesday morning. Elsewhere, we're not seeing a great deal of activity. There are clearly some stocks that are struggling to get open this morning. We've got a trade on the Ibex. It's up by 0.3%. We await the CAC. We await the DAX. And critically this morning, we await the AEX. Heineken, I'm told, is up very strongly, Kriti.
Yeah, it's to the tune of about 9%. So right out of the gates, we'll see if some of that market pricing changes in the next few minutes. But at the moment, when you look at this kind of from a broader perspective, we are still waiting for some of the other Dutch stocks to open. You are seeing some of the heavyweights. I want to see some of the outperformers in the last couple of days take a back foot today. This feels slightly like a rotation in terms of the stocks that are on the downside. A little bit of a commodities trade that is lagging, but broadly green on the screen. Your biggest index contributor, again, coming out of the Netherlands, Anheuser-Busch, actually, right next to Roche. And then I'm looking at some banks here as well. This is quite the Mod Podge of stocks this morning.
Yeah, I mean, AB InBev possibly lifted by Heineken, I guess. But that's, so that stock, AB InBev is up by just shy of 4%. Heineken up by 8.4%, taking the sector with it. Carlsberg's higher by over 2.8%, Royal Unibrew. So, yeah, there's a beer theme that runs very strongly through this Wednesday at 8 a.m. in the morning programme.
Ahold Delhaize is down by nearly 3% this morning. So there are some maybe compensating factors when it comes to the Dutch market. In fact, that is the biggest percentage drop. And the second biggest points drop, Shell is the biggest points drop this morning in terms of what we are seeing. But Anheuser-Busch actually is the biggest points gainer, despite the fact that this feels like very much a Heineken story. Nestle, I wonder if I wonder if there's just a kind of a consumers are spending on premium goods theme. Because the theme that came out of Heineken was consumers are still spending on premium beer. Does that then apply to premium other things as well?
And they don't seem too worried in lots of global geographies about the role of GLP-1s and how much that weigh on people's demand for these products. I thought that might be something you can transfer to other companies.
Yeah, certainly something we're going to keep an eye on. I still have an eye on the Italian baking story because if you look at one of the biggest index contributors as well to the upside, UniCredit is top in the list this morning. Stock 600. We know that they talked about increasing their Generali stake yesterday. Banco BPM came out with their earnings this morning as well. Those shares higher by 3.2%, despite the fact they're increasing their offer for Anima to about €7 a share. That's being digested fairly well by the market about 2 minutes into the trade. So that's going to be a story that we watch very closely.
So Novo Nordisk is the biggest points drop this morning. Maybe there is a read across out of that into the GLP-1 story.
A lot of threads to tie together, but perhaps the biggest one might just be what the policy agenda is coming out of the States. Goldman Sachs CEO David Solomon shared his view on President Trump's policy choices. Take a listen.
You know, I think that the administration is going to run a more growth-oriented agenda. And I think one of the reasons why the market has responded the way that it has is because the market believes that a more growth-oriented agenda will spur investment. You know, certainly the regulatory environment should be a constructive tailwind, but the broad policy, landscape is still uncertain.
Goldman Sachs CEO David Solomon there speaking about the investment opportunities created by Donald Trump's pro-growth agenda. Let's see how that shows up in the markets, though. Hella Jewell, EMEA CIO for Fundamental Equity over at BlackRock, joins us around the table. You clearly got the orange memo. I'm now kind of noticing. Guy didn't get in on it. We didn't tell him.
No.
We're going to fix that next time. Helen, we keep talking about this regulatory agenda that was kind of priced into this market. I want to say even ahead of the election, certainly after. In the last few weeks, though, a complete rotation away from that. Is that a blip?
No, I don't think it's a blip. I mean, whenever you're looking at markets like this, it's always important to think about the three elements and bring it back to basics. So you've got the risk that you have in the market, and there is certainly a bit of a heightened risk at the moment. The risk of a little bit of policy uncertainty, the risk as well of inflation and interest rate stickiness that comes into that. But the risks are certainly higher. You've then got the valuation. And we knew at the end of last year that valuations, particularly in the US, were at the top end. And, of course, what we've seen year to date is those have started to come off. The US has underperformed year to date, and I think that's valuation driven. But then the third bit, and you said this at the top, is the earnings and the earnings story. And it's so important that we remember that. The earnings season so far has been very good. You know, we're about 2/3 of the way through in the US, 12% up in EPS terms. In Europe, we're a little bit, like just under halfway through. But again, on average, a 4% beat from an EPS perspective. So the earnings are coming through. Now, what's interesting, the market isn't necessarily rewarding the beats as much as it's penalising the misses. And that then brings it way back to that first point of the risk, that heightened risk, that the market needs the clarity of those earnings. And when it doesn't get it, it's certainly penalising companies.
I want to come back to reason number 2 that you would put in that list of positivity. You said valuation concerns are now showing up. Why now?
Mainly because I think of the nervousness and that risk. If you're at a point that the market has or feels that the risks are very, very low, then valuation matters less. You feel you don't need that real comfort of having... You feel like more comfortable having high valuations, to be honest, Kriti. You don't need quite as much comfort coming through in the earnings. The minute that risk premium starts to increase, you need more coming through in the earnings, and higher valuations just generally make you more nervous. So I think so much of that is linked to the risk. And the risk is linked to tariff uncertainty and earnings uncertainty and inflation uncertainty and interest rate uncertainty. So the higher risk environment we're in now means that suddenly those valuations that perhaps I could be more comfortable about before become a little bit more nerve-wracking for me as an investor.
Helen, good morning. In terms of all those uncertainties, I mean, do you anticipate that some of them are going to be with us for a long time? I wonder, with tariffs, the agenda there can change quite quickly. They can be used tactically and then withdrawn. I wonder if this is where we are for 4 years, wondering about tariffs. I don't know if we ever get to a place where we know.
Yeah, I mean, I hope not, Anna. It would be a tricky 4 years, although plenty to talk about. I think that there is going to be a lot of uncertainty, but I think I've probably focused too much on the negative parts of the uncertainty. There are some potential tailwinds as well in what we're seeing. I mean, Ukraine certainly is a situation that, obviously, humanitarian way would be a real positive, but also particularly for Europe, that is a situation that any resolution there would be a real tailwind. So some of the uncertainty that we're seeing might also be on the positive side of things as well. I think that it is unlikely that you can be talking about tariffs without knowing where you are for 4 years. That feels pretty unlikely. So I think that the risk premium might be higher, but let's not forget, in the US, that equity risk premium actually went below zero for a period towards the end of last year. That is actually nonsensical from a fundamental equities perspective. So actually having something which is a bit higher than zero from an equity risk premium perspective, totally normal, nothing for us to get worried about.
OK, and in terms of opportunities then, if you are thinking about other geographies, Europe, and I know AI has been a thing we've talked about a number of times, Helen, where do you focus for AI opportunities in Europe, given everything we're learning very quickly about where in the sort of supply chain the benefits are falling? Are you talking about mining companies, energy efficiency companies? Where do they fall, these benefits?
Yeah, all of the above. I think the energy efficiency and, of course, the chip companies, but the energy efficiency are the ones where I do think there are some really interesting industrial companies. What's also very interesting for those names is that at the start of the year, when you saw everything with DeepSeek, they pulled back quite a lot. And a lot of them have recovered, but some of them haven't quite recovered just yet. So those chip names, those energy efficiency names, they are the ones in Europe that we think have got a particular edge and we're particularly interested in and focused in. The mining names as well, they are areas that, in general, of course, you need not just for energy efficiency, you need, something we haven't yet talked about is China. And actually, during earnings season, China has actually been a lot more stable than people thought. Not necessarily particularly exciting, but OK and stable. And stable is good in these kind of markets. So, that is an area that we're also very focused on, but not purely because of the AI play. We can't ignore the fact, especially with the CapEx numbers that were coming out during earnings season, the AI play is predominantly in the US, I'm afraid to say.
Is the US still exceptional?
Oh, how did we manage to get this far without using that word? It's where you see the earnings coming through. So, yes, we still are
but still high
positive
prices.
Over. Exactly right. So long term, we are still very focused on the US. We think that's where the high returns are longer term. But short term, where you are seeing this risk, an elevated risk, more diversification in portfolios, it doesn't make sense to just have a portfolio that's overtly focused on the US. But long-term, those earnings numbers, as I mentioned at the stop, 12% EPS in the US versus 4% in Europe. And ultimately, that is what drives earnings.
If I'm thinking about diversifying to Europe, is it over? The DAX is up 10%. Am I going to get more than that?
Well, we had it last year as well. I think you can get a little bit more in because of the valuation gap. So you have seen the valuation gap come down again, more like the kind of 40% that we're used to. I think it can come a nudge lower, again, because of that equity risk premium within the US. So I do think it has got a little bit further to run because of the valuation
A little
gap.
bit means?
Maybe a few more percent. Give it another quarter or so, I would say, Guy.
OK.
What is the hindrance to that? What is, if we talk about the tariff risk, we talk about the interest rate risk as well, what undermines the potential rally?
Always China. I mean, within Europe, there is always that nervousness around China. As I say, China has been pretty stable, pretty decent over the earnings season, with anything that comes back there. But let's again take it from the other side. What could give it a bit of a super boost? I mentioned Ukraine, but also Germany, of course. Stability within Germany and the feeling that you've got a little bit more stability within the European area, that will be really positive as well. So China is always a bit of a tailwind. The US dollar is something we should also be focused on for Europe. Very good for European exporter companies, not so good for flows coming from US investors into Europe. So the dollar's strength is something we also need to keep a really close eye on as European investors.
And how much of it... You've mentioned Ukraine a couple of times, and we're working our way towards a conference on Friday, Munich Security Conference, where we might find out more. I mean, this could be a substantial upside, could it, for Europe, for Germany, for Poland, for those kind of markets?
Yeah, no, I think so. I mean, it is, I think, something that people are looking at. And there was a lovely phrase I heard used to describe it, the peace dividend, which to me was a really nice way of just kind of saying, you know, this is about people first and foremost, but from a market's perspective, there would certainly be some stability and a real tailwind if there was a feeling of resolution. And not only because of the sentiment in the area, but also because, of course, of the energy prices, which is such a key part of the cost pricing mechanism within Europe. So, yeah, I think it would be a really real positive for the region.
So glad you mentioned the energy prices. I just pulled up a PE ratio of the stock 600 on my screen, and the troughs that we've seen in the last 5 years or so were in 2020, March 2020, with the COVID hit, of course, and then in 2022 with the energy crisis. At the same time, we're starting to see the European Commission and some of these energy prices hit levels that were concerning back in 2022. Is that something the market should be pricing in more effectively?
I don't think so, because I think, you know, that is one part of it. But on the other side, from a Europe perspective, there is a lot of conversation about increased competition, looking at deregulation, for example. And that is something the banks, the European banks, and a lot of the time we're talking about how come the European banks are doing so well, even when interest rates are potentially starting to nudge down. And a lot of that is around some of the kind of increased competition and deregulation we're seeing. So, no, I don't think so. And don't forget, it is to an extent priced in. You know, we are still trading at a 40% discount, still higher than average versus the US, a lot higher than average. So there are still a lot of nervousness about Europe priced in, perhaps just not as much as there has been before.
The US stocks need the Fed to cut to keep going higher. The global stocks need no universal tariffs and things like that to go higher. What knocks us off a more positive trajectory at this point?
So I wouldn't say it's that the Fed has to cut, but the
can't hike.
Sorry, yeah. Oh, not hike. I mean, that would be... But all of this is linked to the inflation in the US, OK? Yeah. Sticky inflation in the US would be a bad thing for the market as a whole. Yep. And that is linked to both the Fed and the cutting in the Fed perspective, but it's the inflation story that I think is probably the thing that we need to worry about on that tail risk side on the right. Stickiness of inflation, particularly in the US, but also in Europe, that is something which I think is probably an area that the market has to be super nervousness about and concerned about. The inflation itself and the impact on the Fed as well. A Fed hike, and I can't believe we're even talking about it compared to last year.
She started
would be
it.
Bad.
I did start it.
Yeah, that would be a definite game changer. We've been talking about it. It's been creeping into the conversation for a while. Certainly, people like Torsten Slok at Apollo have been talking about it for a while. CPI out at 1:30 today, so I guess we're going to get an update on what we're going to see there. Helen, always a pleasure. Thank you very much indeed for stopping by to see us. Helen Jewell, EMEA CIO for Fundamental Equity at BlackRock. The Core 6 looks a little bit like this morning. Let's talk about what we are seeing at the centre of gravity here in Europe. Generally a reasonably positive bid. Luxury comes back. ASML, the chip sector, up a little bit as well. I do wonder whether Nestlé is benefiting from the Heineken trade this morning. Premiumisation has been something that we haven't talked about for a while, but it's working for Heineken right now. Is it working over at Nestlé? Let's figure out what the other individual stock stories looks like. Nestlé, Heineken, front and centre this morning, Joe Easton.
So it is all about those beer stocks today, Guy. We're seeing some massive moves in these shares at the moment. Heineken itself actually up the most since 2008 for that stock over in Amsterdam. We're up 12% on that stock at the moment, following that better-than-expected volume at the company, partly driven by those premium brands, as Guy was mentioning there. We're seeing that feed through coming in to the rivals, AB InBev, Carlsberg and Royal Unibrew all rallying on those results, feeding through into the market. Then the other Dutch stocks we are looking at today, ABN AMRO. Now this one is actually trading very slightly higher, up almost 4% now, despite a miss on the net interest income. They have got a bit of a buyback, and bear in mind that stock is down sharply already over the past year. So even though they're paying out more in staffing costs and expenses, kind of priced in to those shares. But one Dutch stock not going going higher is a hold. I've got a bit of weakness on their earnings per share. They have got the dollar boost, of course, coming from the US with all those US sales for the company, but that's not quite making up for the decline in the earnings per share number. I read that on the BI analysis on the terminal a few moments ago. Moving over to the UK, Barratt Redrow rallying today. That was up almost 10% at the open. It's come down a little bit. We're now up 6%. They have beaten on their first half sales and also, more importantly, flagged an improvement in their sales in the past couple of months. And that is a relief, given earlier this week we saw a rival Bellway declining on some weak sales. Then in your Italian banks, a lot going on. Once again, we have got news of BPM raising their bid for Anima. That's up to €7 per share in the asset manager. They're kind of coming off the highs on that one. BPM itself had results out, and actually they do look pretty strong. But what does that mean for UniCredit's bid for BPM? Potentially that means the price might even go up, but at the moment UniCredit shares holding steady. Once again, Italian banks keeping us busy this morning. Then finally, on the ratings changes, the big one in the Morgan Stanley note was probably the equal weight on Novo Nordisk. They say they want to see more data on the latest obesity drug sales before they become bullish, and that is weighing on the stock very slightly this morning. Novo Nordisk falling 1.2% as Morgan Stanley is equal weight on the stock this morning.
Joe, thank you. From our equities team, Joe Easton, with all the stocks on the move. Another one in focus this morning, Siemens Energy. The stock under pressure despite posting a record order backlog in the last quarter and a strong outlook. The stock down by just shy of 2%. We'll get to that story next. This is Bloomberg. Welcome back to the opening trade. 20 minutes into Wednesday's session, European equity markets look to be posting some modest gains this morning. Certainly Heineken, one of the stocks that is lifting the wider beer sector. Let's go to the energy space, though, Siemens Energy specifically. Shares down a touch today, but the company says it expects rising electricity demand and a shift to renewable energy to drive growth. It also posted a record order backlog in the last quarter. Let's get to Bloomberg's energy reporter, Rachel Morrison, who joins us now. So there does seem to be a slightly negative reaction, but I know that this is a volatile sector, Rachel, and the stock was called higher at the start of trade. Let's talk about some of the things that have gone right here and the role that AI is playing in these results. What did you identify?
Yeah, it's really interesting because Siemens is looking like the demand for parts that data centers need to service, grid connections, so circuit breakers, transformers, demand for that has increased. And that's really been identified as the driver behind the increase in the share price over the past year. Whether that will continue, how that will evolve is probably the key growth question. And behind that, we have the sort of uncertainty surrounding the wind sector, particularly in the US, and some comments made by Trump, which are quite anti offshore wind in particular. That sector is really struggling. We sort of think onshore wind will be fine in the US, but that will be a key question for investors looking at the stock.
So this is something that we've seen with some of the other wind manufacturers as well. Walk us through just kind of the issues for the broader sector. You hinted there with Donald Trump. What else is at play?
Yeah, the sector has really been struggling with rising supply chain costs. That sort of started in the pandemic and has just kept going. And that's what, when you were talking about the order backlog and things, that's what caused some of the problems, is sort of agreeing to pricing, which then the supply chain costs increased for. So we do see some of that easing. It should be, the worst of it should be behind some of these companies. But what the key driver now will be how quickly the sector progresses from here, what orders look like. And sort of we're looking at the US, we're looking at other growth markets, Taiwan, Japan, seeing where those growth figures will come from, because orders is really what these companies need to see for wind turbines and gas engines and things like that.
Rachel, can we just talk about the gas story in a bit more detail? So gas prices are at 2-year highs. It's still cold outside. In some way, there's some logic to that. But it looks as if they're going to stay high over the summer, which is usually the period in which we refill storage. And that looks like it's going to be a problem. There's talk of gas price caps coming back in. That's being talked about. It's interesting, Russell Hardy over at Vitol's talking about subsidies being required, negatively priced storage being required, maybe some of these tools being necessary to refill storage ahead of next winter. How pressing is this? Does Europe need to get its act together quickly?
Yeah, the European Commission is due to make some new communications about affordability. It's a huge issue, and Ursula von der Leyen, the President of the Commission, has pledged to bring down prices. So she needs to find ways to do that. And the price of gas, you mentioned it, it's at a 2-year high, and it's really been steadily high since the crisis. Obviously, we're way off some of those really high prices we saw, but it's enough to have policymakers in Brussels worried. And we had a letter overnight sent by industry in Europe saying to the Commission, please do not put a cap on gas prices. It's going to meddle even further with some of the market dynamics. So the industry very opposed to that, and a really split picture over what should happen to storage, whether there should be rules introduced and subsidies, or whether they should be loosened. So that's a really key question, and we're following that very closely over the next few weeks.
We'll watch for news on that. Rachel, thank you very much indeed. Bloomberg's Rachel Morrison on what's happening with the energy story.
Well, let's go from the energy story to the consumer spending story, the beer story, the Dutch story. I'm not really quite sure how to frame this. Let's turn to Heineken, of course. Shares rising quite a bit after the brewer reported full-year results that came in ahead of estimates. Those shares climbing by about 11.3% this morning. Bloomberg's Sarah Jacob, covering Dutch equities, joins us now. Sarah, walk us through the Heineken story here. We just heard from the CEO earlier in the program, but walk us through what actually helped beat expectations this time around.
Good morning. Yes, Heineken reported beer volumes that meet estimates in the quarter. This beat was driven by sales in many of its large markets like Brazil, Mexico, and India. And we're also talking about growth from the premium category. So Birra Moretti, the non-alcoholic variants, which is Heineken 0.0. So that's really a category which Heineken has been pushing and driving a lot. And we see the Gen Z segment sort of, try to temper their alcohol intake. We see also regular beer drinkers choosing non-alcohol for different occasions. So that category is growing. But the market also seems to be happy with the guidance for operating profit. And the 1.5 billion share back over 2 years seems to be driving that share price up. And also we're also seeing that with other beer makers today.
Let me ask you about another Dutch company, Sarah, since we have you. Ahold Delhaize in focus, reporting earnings. The stock is weaker, though, despite the fact that the operating profit numbers beat estimates. What stood out? Basically Ahold is a stop-and-shop owner, as many of us know it now. On one hand, the fourth quarter operating profit beat estimates, but the market is focusing on the U.S. margin miss. One of the analysts actually pointed out that while the outlook is in line with what they were expecting, Ahold mentioned margin of around 4% in 2025, and in previous years it's talked of at least 4%. So that's a focus area. And also, we talk about Bowl. That's the online retail play of Ahold. We've seen in the past that the company has, had talked about an IPO and then sort of pulled plans for it because cited market conditions. Sarah, thank you very much. Thanks for the update, Bloomberg. Sarah Jacob with the latest on those Dutch names. Coming up, we'll talk about tech. The UK and US failed to sign the final communique at the Paris AI Summit. We'll get more on that and other tech themes. This is Bloomberg.
We need international regulatory regimes that fosters the creation of AI technology rather than strangles it. And we need our European friends in particular to look to this new frontier with optimism rather than trepidation.
U.S. Vice President J.D. Vance speaking at the AI Action Summit in Paris yesterday. Now, the U.S. and the U.K. were among the countries that did not sign the final statement from the summit, which called for promoting international governance over AI. Bloomberg's Tom McKenzie has been covering the event for us live from Paris. He joins us now. Tom, Europe has actually been out front in some of this regulation. What was the sticking point when it came to that final communique?
It has, of course, yes, and the EU AI Act is starting to kick into place this year and will be fully implemented almost in its entirety by next year. And you heard the pushback from the Vice President of the US, J.D. Vance, there too, that regulatory framework. And it's notable that the UK did not sign on this communique. Not so surprising the US didn't. They are ripping up regulations on AI and going full bore on the build-out of this technology in the US, given the competitive challenges of China. That is the priority in the US. But notable that the UK did not sign on it, given that the UK, of course, was the nation that brought everyone together at the end of 2023 with the AI Safety Summit. The UK saying that the communique, the language that they had the problem with in the communique was around the lack of focus on opportunity and security. They also said there wasn't enough practical detail when it comes to global governance. That was one of the priorities in the communique. The UK saying there's not enough practical details on how to focus on that, and also not enough focus on national safety. So those were the issues from the UK. From the US side, it was pushing back. They didn't sign on to this communique, they say, because of the language around inclusivity when it comes to AI in this communique. 60 countries and organizations did sign on, including, notably, China and India. And some of the priorities outlined in the communique talk about transparent, open, inclusive, ethical, and safe AI. The US and China both say, look, they're working together with France. They work with them through this summit. They'll continue to work at an international level on cooperation, but neither country prepared to sign off on the final communique ultimately.
Tom, you've been there for a few days. You've been right there. You've had a ringside seat to what has gone on at this summit. Give us the debrief. What's the takeaway? What were the key things that you took away that the rest of us should learn from what just happened in Paris?
At the start of the summit, Guy, it was all about DeepSeek and how to respond to that, the impact of DeepSeek. And there were different approaches and different responses from different executives that we spoke to. I think a takeaway is, from whoever you speak to, it was not and is not necessarily a paradigm shift in terms of the spend on infrastructure around AI. I think that's pretty key if you're an investor. That was one key takeaway. Others said, look, this is very positive in terms of the debate about closed models versus open models. And we heard that from the CEO of Mistral here in France. He said this is really positive. It moves things much closer towards that open source model paradigm that we're looking at. Demis Hassabis of Google DeepMind said, not a silver bullet, doesn't change the efficiency curve, doesn't think that they are being completely honest about the way they built this model. But again, I think the key takeaway is no one that I spoke to said we're going to see a slowdown in the spend around CapEx and chips. That was one key takeaway. The other one was Sam Altman, of course, speaking to us, and the conversation shifted, of course, when Elon Musk made the bid for OpenAI. He said a lot of governments and a lot of leaders are talking to him saying, we want Stargate, that $100 billion to $500 billion project on infrastructure in the US, to be built in our own countries. The focus on economic growth, Sam Altman said, is a key question that people have been putting to him, lawmakers and leaders who he's been speaking with here in Paris. And then, of course, it turned personal, and he talked about Elon Musk and why, gave the rationale why he thinks Elon Musk is making the bid for that company. Take a listen.
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product.
And the Sam Altman Elon Musk standoff and feud in some way kind of isolates or at least distills one of the key tensions at this summit, which was who controls and shapes this technology going forward, which companies and which nations. And that was a key part of the discussion as well.
Tom, thank you very much. Bloomberg's on Mackenzie from Paris, having covered that AI summit there. Let's stick with the technology theme. Our next guest argues that control of emerging technology is a key frontier in the battle by states to shape the global system and set the rules under which others must operate. Bruno Massaish is a senior advisor at Flint Global and Portugal's former European Affairs Minister. He's thought long and hard about this subject. He's written a book on it. His new book, World Builders, is due to be published tomorrow. He joins us now. Bruno, very nice to have you with us. I'll take us back to the AI summit, actually, because I thought what we heard from J.D. Vance was very interesting in keeping with the theme of your book, talking about the need for the US to push back on European regulation of US companies. And that struck a chord with me, because you talk about great powers building these new worlds and then maintaining the ability to control these worlds. And so does this push at our sort of geophysical jurisdictions? We regulate based on our politics, our current geophysical map. Europe regulates, the US regulates, and yet these companies cross all of these borders. This is getting increasingly complicated, and it seems that the US is prepared to push at the threads of this.
Yes, the US wants to move fast. I think that's an improvement, that rather than trying to slow China down, they are trying to speed up. It was surprising and I think interesting that this language about Europe was, of course, very different from what the Joe Biden administration would say. In the case of Joe Biden, there would be a common effort to compete with China. And Vance really came out as, you Europeans have to follow us otherwise or else. And that, I think, was different. I'm not sure it's the right answer. The question of open source and closed source is very important. I think China is making the right choice, or at least DeepSeek is. I don't know if the Chinese authorities will follow along. But, the more open, the more you provide access to other parts of the world, the more your influence will spread. And the U.S. cannot afford to become parochial on this.
Right. I mean, it's interesting, isn't it? Because Europe might or might not change its stance on AI regulation, on tech regulation, on regulation of U.S. companies, either based on what the Vice President says or based on its own thinking. It might or it might not do that. But is the U.S. overestimating its ability to control how its companies are treated in other geographies? I mean, if you're a U.S. business, but you do business in Europe, you have to follow European rules, surely.
Sure. I mean, and that's sort of the retaliation that the EU has in case, there are tariffs, in case Donald Trump goes ahead with tariffs against the auto sector in Europe. U.S. tech companies in Europe are going to suffer, and this has been put on the table already in private, but even a little bit in public as well.
Bruno, we've got an advanced copy of your book. The camera will catch it in a moment. And one of the things that stood out to me is that you divvy up the chapters by every 2 years. So I'm going to go a little bit of a rewind, go maybe 2-3 years back to 2022. The conversation in 2022, as we know, was security in Ukraine, energy security. How does security overlap with AI? Because in the States, it seems like that's the concern when it comes to China's access to this technology. In Europe, how does security overlap with AI?
Yeah, this is a question about how open the access is going to be. The more open, more available to different actors all over the world, the greater the risks on security are going to be. I myself, I'm in favor of that. We need to be concerned about democratizing AI access. I just came back from India. It was encouraging to see entrepreneurs in Bangalore starting to work with DeepSeek, but other models as well. But of course, we're going to hear from the big companies that this is a huge risk. And to some extent, it is. I mean, you can do things with AI that you couldn't do otherwise. Probably you'd need a top PhD in biochemistry to produce a bioweapon. And now you can use some of these models already to produce a bioweapon. Yeah. It's going to be a debate, and, there are going to be two sides.
You talked about India. Let's talk about the other major global players in the world. Russia and China have a major edge when it comes to cybersecurity specifically. The U.S. has been trying to combat that. How does Europe catch up in the cybersecurity space?
Less regulation, more knowledge, more skills, a more powerful industry, more leverage. That's been our advice for a long time. Those of us who have been writing about technology in Europe, we've been too focused on regulation and too little on innovation.
But Bruno, you've also served within a government. You served within the Portuguese government. You lived in Brussels. You've had that kind of anticipation. Does this come down to fiscal spending? Do we need the EU Commission to specifically spend money here, or the Portuguese government to specifically spend money here? Is that the way through?
I think the problem in Europe has always been that we have this division between the member states and the EU, and they're both too weak. So we have to make a choice. Either we concentrate these powers in Brussels or we return them to the states somehow. I'm more in favor of concentrating them in Brussels. But right now, there isn't executive power. You look, last night's press conference. You have two guys there, two branches of government, it seems, Trump and Musk. There isn't a third branch anymore because the courts seem to have been sidelined. But at least you see this imposing executive power to take decisions, take the country in a certain direction. Chinese Communist Party, in a different way, does the same. In Europe, there's no executive power. And for these decisions where everything is moving so fast, you need that.
Does that put the UK in a better position?
It could potentially, and I wasn't entirely against Brexit when it happened, but I just don't see the government standing up to the challenges. But in principle, you could allow more flexibility and more decision-making power. So far, we haven't seen it.
Are US efforts to slow China down working?
I don't think so. There's a debate on this, even inside the Trump administration. I think DeepSeek was an illustration that they're not really working. Of course, on chips, China is still behind. But, the question I want to ask the audience and even investors is, if we saw the kind of engineering talent in the case of DeepSeek, should we be ready for a surprise in chips as well?
What do you think? OK, let me ask you that question. Should we be ready for a surprise on chips?
There's a lot of rumors going around that China is working on different technologies, different from extreme ultraviolet, and we could have a surprise.
Should NVIDIA be worried?
I think NVIDIA should be worried more about that than about CAPEX and the amount of spend. That's always going to be there. We need more and more chips every day. But the question of whether those chips are going to be NVIDIA or going to be Chinese potentially in 5 years, that is the real question for NVIDIA, I think.
You talk about world building in your book, Bruno, and going back to where we started the conversation, I guess, we talk about the different sort of virtual worlds that are being built. And that takes us to the metaverse. Is the metaverse really this... Is it really going to deliver what we thought it might deliver a few years ago?
You know that originally my book was going to be called Masters of the Metaverse, which the publishers thought was brilliant 3 years ago, and then they changed their mind, which I think is illustrative of how the word metaverse has become a little bit toxic. The word has become a little bit toxic. People don't like it, but the concept is there. The metaverse is everywhere. It's just, X or Twitter is a kind of metaverse. It's just not the focus on 3D is not that important, but the creation of these virtual worlds that we migrate to them and that action happens there, this is happening all the time, and AI will only accelerate it.
Bruno, great to see you. Thanks for stopping by to see us. We greatly appreciate it. Bruno Massaish, the author of the new book, World Builders. Out tomorrow, apparently. Kriti's looking for a signature. Coming up, the EU vows to respond to US tariffs on steel and aluminium imports. We're going to discuss that next with the Director General of the European Steel Association. This is Bloomberg.
Welcome back to the opening trades. We are 46 minutes into the European session. We have European equity markets going higher this morning. The Heineken story certainly pushing stocks a little higher in Amsterdam, and elsewhere we see some positivity, Guy.
Let's talk about what is happening in the metal sector. We are keeping a firm eye on that right now as we watch for tariffs, the tariff story, and how it feeds through. Japanese leaders have asked President Trump to exclude the country's companies from his steel and aluminium tariffs. Japan's trade minister says the government will continue to advise companies about US tariff policy and make necessary measures to mitigate the impact. Japan exported over 1 million tons of steel to the US last year. Meanwhile, the EU is vowing to respond to these same tariffs. Officials apparently have prepared a list of American goods to hit with retaliatory tariffs. Joining us now is Axel Eggert, the Director General of the European Steel Association. Good morning, sir. How do you think Europe should respond?
Good morning, Guy. Of course, we need to have a response, and the first thing that should be done is to open the channels for negotiation. We had exemptions over the last few years. We have the similar issues as the US. We are overwhelmed by excess capacity offloaded on our markets. The EU imported 37 million tons of steel last year. The US imports 27 million tons of steel, and that is a result of a global excess capacity. So we have the similar issues, and we should sit together to negotiate before any countermeasures by the EU are being taken.
Axel, what might those negotiations actually entail? Specifically, because now we're talking about tariffs, but just under the Biden administration, quotas were very much in place when it comes to the steel relationship between the U.S. and Europe. Could quotas be an alternative to tariffs?
Yes, indeed, we had quotas, or we still have quotas until today. That is, of course, an option, but at the end of the day, we need to have an agreement with the US to address global excess capacity, and quotas between the two blocs can only be a temporary measure before we come back to common joint activities to address this excess capacity.
So, Axel, clearly Europe is part of a global market here. You're talking about that global overcapacity, but European politicians no doubt care because of the amount of spending they're going to have to do on defence. They care about a European source of steel. Are those conversations happening, Axel? Is that a line of argument that you're pursuing?
Yes, absolutely. We are in the midst of negotiations with the European institutions and with the member states how to place this critical sector for the EU economy in the whole geopolitical context, defense, but also to save basically the industrial value chains in Europe. And steel is a basic material for a lot of important value chains, for example, mechanical engineering, renewable energy equipment, and so forth, but also defense. So it's a very important sector. And we can, of course, find common ground with the United States on several issues, which includes steel, which includes, of course, also purchasing of US military equipment, which is also steel intensive, by the way. So I think there's so much common ground, and that also Mr. Trump will understand that, hopefully, and come to conclusions with the US before the 12th of March, if possible.
Yep. So your industry is facing a challenge when it comes to the tariff story, but it's also this morning facing a challenge when it comes to the energy story, which is something that has been with us for quite some time. Axel, European gas prices are at a two-year high. There's talk in Brussels of a need for some kind of help this summer, be it a price cap, be it negative prices for storage. There's all kinds of things being talked about at the moment. Do we need, from your industry's perspective, to sort this out quickly? How much of an energy challenge do you see over the next year for the European steel industry?
Yes, this is one of the top four issues we have as an industry. We have the ambition to decarbonize. For that, we will need 168 terawatt hours of electricity by 2030. That is comparable to the total electricity consumption of Belgium. So that is the amount we need to achieve the objectives with more than 60 decarbonization projects we have running and planned by 2030. But we don't have this amount of electricity, and we don't have it at the price we need. We need this electricity also to produce hydrogen, because the European steel industry is a hard-to-abate sector which cannot be reduced its CO2 by other sources. So we need the hydrogen for that to become carbon neutral, and that has its price. So what is crucial now is to find ways to reduce the electricity price for industries that are willing to decarbonize and that are competing globally. Okay. And there are several options to do that.
Okay, Axel, do you think that we should put growth before green in Europe? Should that be the priority now?
No green without growth. That's definitely an issue. We don't have the revenues currently that would allow us to execute the investment in the decarbonization of our industry. So a reduction in network charges, the electricity network charges would help, for example, but also a redesign of the European electricity market would help us to reduce electricity prices, and by that we can also execute investment.
So, Axel, you talk about executing investment. How do you bring down some of the fixed costs? You talk about electricity. There's other pieces of this equation as well, logistics as well. How do you bring down the fixed costs associated with that revenue generation?
Actually, we can quite well compete with the fixed costs which we have. That is not the problem. problems we have is indeed the energy prices in the EU. It's a low demand, and it's the spillover effects of global overcapacity, which brings steel imports at very, very low prices. And as you know, China is currently exporting below own production costs on the global market, and by that depressing other regions as well, including the EU. So the fixed cost, in my view, is not really the problem. It's all the surroundings. It's the issue of course of the fixed costs, which we will have through the decarbonization, if you want so, because there will be a lot of capital investments that has to be executed. From that point of view, we need, of course, at the border of the EU, some protection because others are not following the decarbonization path.
OK, yes, Axel, I want to ask you about that. The safeguard regimes that were put in place in 2018 in similar but different circumstances, you say they have not worked. So how do they need to change?
They have actually worked in the first years, but now the free quota is at 125% of traditional imports. So from that perspective, it's indeed today not working anymore, but it can be fixed for the next 1.5 years until the safeguards expire. That can be done to address the country quota, quarterly quota, the residual quotas, which can be taken later on by all participants in the market. So there are some options within this instrument that could somehow help our industry for the next few months. But what we need in particular is a follow-up regime which can be based on the safeguard methodology, but it should look at the market situation, at the demand situation in the European steel market, which today is not the case. And from that perspective, we hope that the European Commission will come very quickly with proposals that explain us how to do that.
Axel, you're talking about the European Commission. We have a German election in less than 2 weeks as well. We know Germany is one of the largest steel producers in all of Europe. What do you need from the new German government, if we do indeed get one, that can help your case, that can help the case of European steel? And is that investability believable when it comes to fiscal investment from Germany? Very quickly.
Yeah, I believe Germany has already done a part in terms of helping in the capital investment for the new technologies. But what we need in particular is now support to address global overcapacity spillover effects on the European Union. Secondly, we need to fix the carbon border adjustment mechanism, which will come into force actually in January next year. But as it's designed right now, it cannot address resource shuffling. So we will see a lot of steel still coming in with a carbon footprint. Thirdly, the energy issue, which we have discussed. We need some relief from the energy costs. And fourthly, we have a huge amount of steel scrap being exported, which could help us in our objectives for the circular economy. So these are basically the four issues we try to address with the European Commission.
Axel Eggert, Director General of the European Steel Association, on the back of those steel and aluminum tariffs coming out of the States. We thank you so much for joining the program. Coming up, we're also going to put a focus on the Italian banking sector. UniCredit CEO Andrea Orcel will be joining Bloomberg Television at about 9:10 a.m. London time, just as they increase their Generali stake. And, of course, Banco BPM increases their offer for Anima as well. That conversation next. It does it for the opening trade. The Pulse is up next. This is Bloomberg.